So if you want to learn how to trade options, purchase my ebook located in the description below. If you're seeing this on TikTok, it is located in my IG bio. So how did I make $165 just trading Pepsi call options? So looking on the daily chart, basically as soon as I saw that on Monday, right, Pepsi had trouble breaking the 50-day moving average, I just waited for a move for Pepsi to go down. And so basically on the 28th, Pepsi tried breaking the 50-day moving average once again, but it got rejected. So around the previous day, which was 150, I tried buying a couple of call options into Pepsi once Pepsi reached that level of 150, right? And basically when I bought Pepsi there, right, I sold out as soon as it reached somewhere around 151, 152. And basically the goal was to sell at the half of the candle of the previous day. So if yesterday was a 4-point move, right, my goal for the 29th, right, was to at least see a 2-point move to the upside. So that did happen. So when that did happen, I sold out the position for a $165 gain, which in total it was a 7.38% gain. So basically, when I'm trading mega cap, when I'm trading mega cap stock options, I don't even know what I'm saying. Basically, when I'm trading mega cap stocks, right? Basically, the goal that I'm aiming to get out of a position is when the position is up 5 or 10%. If it's not, close to those percentages, I just wait and try to see like what the trend is in that stock, because usually these stocks, when when oversold mega cap stocks are currently oversold, usually they'll make a comeback eventually. But one of the examples that I kind of want to look at is that usually you kind of want to play when you're doing this strategy, right? Basically, step one, look for an oversold mega cap stock, right, and buy options, call options, right, that expire in 30 days or more. Step two is to sell out the position once it's up 5 or 10%. Then step three is to basically rinse and repeat that cycle over and step three is to basically rinse and repeat that cycle over and over again. So what I've observed, right, is that basically you kind of want to be careful, right? For example, I had probably like in December or November, I had these 3 stocks that were currently oversold. I thought they were oversold, but for example, Johnson & Johnson, right? I got into Johnson & Johnson thinking, oh, okay, I know it broke below all of the moving averages, right? Maybe when it approaches this next support level around 149 through 150, right, maybe it can use that as support and bounce off of it. But that didn't happen. As you can see, that Johnson & Johnson just saw more, it started going down, right? And so basically around the 15th is when Johnson & Johnson started seeing some uptrend, right? And so basically that's why I kind of say, right, you want to buy options that expire in 30 days or more. Because if you buy options that expire in, let's say, I don't know, in a week, right, you're basically gambling your money away, right? Yeah, you're basically gambling your money away. But then again, if you're trading options, right, just note it is kind of a gamble as well too, because each day that passes by, your option decreases in value. So that is also something to note of, right? And that's why I like buying options that expire in 30 days or more. Usually if I'm feeling not so confident in a trade, right, and I feel like I could see more momentum towards the downside, I usually like to go out for expiration dates that expire in a year at least, or half a year. So that way, in case I see more downwards momentum from that specific stock, I can like dollar cost average. So basically, for example, the Johnson and Johnson trade, right? That I made almost $9,000, right? Basically, what I tried to do is basically dollar cost average as Johnson and Johnson was going down along the way, right? And basically, I kind of used the what's called the weekly chart too as a way to know where I could, load up and buy more options, right? So, for example, somewhere around here, right? 146 through 141. So we have 146 through 41. 146 through 141 was an accumulation point. So when I saw that, Johnson and Johnson was approaching those levels, I started buying a couple more call options, right? That way, my call option that I bought all the way up here, right, would be somewhere around here in the middle now instead of being all the way up here. So that way, when, right, let's say Johnson and Johnson starts going up all of a sudden, right, my dollar cost average here, right, of options worth of Johnson and Johnson would basically be in the green a lot more faster when Johnson starts going up. And this basically applies to any stock, right? You kind of want to be careful. You don't want to just be like, oh, it's down today, let me buy some more. Oh, it's down today, let me buy some more. You kind of want to wait and see, like, will it get rejected by the 9-day moving average? Is it still stuck under the 9-day moving average, right? You kind of want to see, right, and wait for confirmation, because sometimes, in a way too, right, the way I do it sometimes too is that, okay, I'm just gonna wait, right? I bought a single call option here, right? And then let's say it starts going up a little bit and it's in the green, right? But my position is only up 3%. I'm not gonna, buy more call options until I see the position being down at least 5 or 10%. And then if it's down 10% again, I buy another, couple of call options once the position is down 10% again. And then let's say I start seeing that, okay, I'm starting to see that, let's say, Johnson and Johnson is having trouble because now it's below the 9-day moving average and it's having trouble breaking it. I'm just going to wait and see on the chart and see if it can approach, somewhere around support level around 146 through 141. And basically, once you, observe the chart, right, and start seeing that, okay, I'm using the moving averages, right, to, use as confirmation to see if, will it break the 9-day moving average or will it get rejected by the 9-day moving average, right? Once I see that, I'll start seeing, okay, I'm going to aim to get into the next support level, whether it be 146 through 141. Any range from that is a good opportunity to get in. And basically what I'll do, I'll just wait and just patiently wait until I finally see that, which was, January 15th. Finally, Johnson & Johnson broke above the 9-day moving average. And basically, I just waited for confirmation, right? And once that happened, I just patiently waited for the position to start going up. And once that happened, my position was in the green and I made a $9,000 gain. You kind of want to, be smart about it. Don't be like, guessing that, I think it's going to, go down more, right? Or I don't know. I just feel like that's my way that I do it personally. That's the way that I've been using it the whole time, really. But yeah, I mean, that's pretty much it to the strategy in a way. Basically, try to be safe. So that's the best way I can put it. And also, if you guys want to start reselling, right, I do have vendor links where you can purchase at my website called worldly41.gumroad.com. And if you want to purchase product, you can purchase my products at World Resells. You can purchase product at worldresells.bigcartel.com, and there you can purchase one-to-one products like AirPods, AirPod Maxes, cologne, and etc. So that's pretty much it. I'll see you guys in the next video. As always, take care, and as always, this is not financial advice. As always, take care. Bye.